Good evening. You're now watching the main news on HKIBC. I'm Chloe Feng. Here's a look at tonight's top stories. The vaccine pass scheme is extended as holders of nullified JEP exemption certificates get a 2-week reprieve. Customs officers arrest 2 men in a money laundering case involving $3.5 billion. And in the United States, progressive Democrats retract a letter calling for diplomacy to resolve the war in Ukraine. The government has extended the vaccine pass scheme for another 6 months. It has also given a 2-week grace period to the thousands of people who hold invalidated vaccination exemption certificates. The government said 20,000 vaccination exemption certificates issued by 7 doctors, allegedly without a proper medical consultation, will be invalid from November the 9th instead of today. The doctors have been given until next Tuesday to argue their cases. This came as Health Secretary Lo Chung-mao defended the government's move to amend the law instead of appealing against a high court ruling that the minister had no power to nullify the certificates. Lo said the amendment ensures that there is sufficient legal basis for the government to carry out its anti-epidemic fight.
It's not whether the government win or someone else win. We have to make sure that it's all the citizens of Hong Kong win in this battle against COVID.
In another move, the government extended vaccine pass regulations for 6 months until June the 30th next year. Lawmaker Doreen Kong criticized the government for extending the vaccine pass without much discussion, as it has an effect on the city's road to economic recovery. Non-aligned legislator Tik Chi-yuen echoed Kong and expressed a disappointment. He described the government's move as brutal and urged the government to be more considerate when dealing with sensitive issues to avoid losing public trust and credibility. Customs officers have arrested 2 men in the city's biggest money laundering case involving $3.5 billion from the sale of precious metals. More arrests may take place, Janice Low reports.
The Customs Department displayed the smartphones, laptops, bank cards, and documents seized during the crackdown on a suspected money laundering case involving $3.5 billion. In an operation code named Alchemist, officers arrested 2 men last Friday following a tip-off. Customs raided 3 flats, 2 firms providing secretarial services, a precious metal firm company, and a money changer. Officers found that from 2020 to 2021, the men, aged 30 and 48, withdrew around 8 tons of precious metals from a security logistics firm. One suspect, a 48-year-old technician, set up a company and opened 2 bank accounts in July 2021. Between July and November that year, $1.7 billion was deposited in his accounts. About $860 million came from a precious metal company. The money was transferred within days to shell or offshore companies. He also instructed the company to transfer $600 million from the sale of metals to third parties. The second suspect, a 30-year-old worker, is an authorized signatory of a trading firm's bank account that was set up in 2009. He received a total of $1.2 billion between January and August 2020. Over 60% of the money were from jewelry or precious metal firms. The suspect then allegedly transferred the money directly to mainland companies or through local money exchange shops. In all, the 2 are accused of laundering a total of $3.5 billion by selling precious metals.
The kind of precious metals involved in this case is the gold and palladium. For the triad matters, we have no evidence to conclude it is triad related.
But Lee believes a crime syndicate is behind the suspects. The suspects were released on bail, while Customs did not rule out further arrests. Janice Lowe, HKIBC.
The city's largest electricity provider says it's inevitable that tariffs will go up next year. CLP Power Managing Director Chang Dong-keun blamed the global energy crisis, saying fuel cost is expected to exceed $20 billion this year. The fuel cost surcharge for customers has risen 42% in the first 11 months alone. But Chang insisted that the next tariff hike will be relatively mild compared to other markets. Details will be announced after talks with the government. A survey has found that the city's mental health index has dropped to 47, far short of the passing mark yet again.
It's already the 5th year has consistently below the passing mark of 52, which is alarming. Which means that we have to we have to focus on what we can do to increase the mental health of the people in Hong Kong. I think in particular, looking at the figure from this year compared with last year, there is a slight drop of 1 from 48 to 47, still below the passing mark, which is also alarming.
After interviewing about 1,000 local people aged 15 and above, the survey organizers found that the overall mental health index this year was U-shaped. This means that those between 35 and 54 years old scored the lowest, as they were the hardest hit by the economic downturn. The government was urged to conduct large-scale mental health surveys regularly so that the problems faced by each age group can be better understood. Overseas, a group of Democratic lawmakers in the United States have retracted a letter asking President Joe Biden to engage in diplomacy with Russia over its war with Ukraine. The legislators made the dramatic U-turn after their call drew a firestorm of criticism, Winna Wong reports.
In a statement posted online, U.S. Congresswoman Pramila Jayapal announced the retraction of the letter, one day after it was sent. "I accept responsibility," she said, while also blaming staff for releasing the draft without vetting. The letter was sent to the White House on Monday on behalf of the Congressional Progressive Caucus, a group of Democratic Party Congress members which Jayapal chairs. In it, they called on President Joe Biden to use diplomacy to seek an end to the Russia-Ukraine war, adding that it would be in everyone's interest to avoid a prolonged conflict. Such a framework would presumably include incentives to end hostilities, including some form of sanctions relief, it said. The retraction followed a backlash from across the political spectrum, with many saying negotiations would only embolden Russian President Vladimir Putin. The letter came soon after Republican House Leader Kevin McCarthy said he may stop further financial and military aid for Ukraine if he becomes Speaker next year. The U.S. is set to hold midterm elections next month. Winna Wong, HKIBC.
Britain's new Prime Minister has warned that difficult decisions have to be taken to return to economic stability. This came after Rishi Sunak chose members of his cabinet. Sachin Ketvi reports.
A day after their appointment, ministers went to 10 Downing Street for new Prime Minister Rishi Sunak's first cabinet meeting. Sunak used the session to instill unity in a party divided by infighting. Staunch Sunak supporter Dominic Raab was appointed Deputy Prime Minister and Minister of Justice. He had lost both posts under the brief rule of Liz Truss. Jeremy Hunt was retained as Finance Minister. James Cleverly kept his job as Foreign Secretary. There was controversy over the return of Suella Braverman as Home Secretary just days after she was forced to resign by Truss for sending an official document from her personal email to a fellow MP. The opposition Labour Party demanded an investigation accusing Sunak of irresponsibility and putting party before country. Observers said Sunak may have to keep an eye on leader of the House, Penny Mordaunt, who had challenged him for the top job and had hoped that a withdrawal would be rewarded with a more senior position such as Foreign Secretary. In his first question time in Parliament, Sunak warned of tough times ahead.
We will have to take difficult decisions to restore economic stability and confidence. This government is going to restore economic stability, and we will do it in a fair and compassionate way.
Hunt had been scheduled to deliver an important financial statement next Monday, but this has now been postponed. Sachin Katpi, HKIBC.
When I was Health Secretary.
People contributing to the mandatory Provident Fund have lost an average of $59,000 each so far this year, according to a consulting firm. But it suggested that members of the pension fund stay put as a market rebound cannot be ruled out. Macy Mock reports.
It doesn't appear to be rosy for Hong Kong workers who have invested in the mandatory Provident Fund for their retirement. The consultancy GUM found that account holders have already lost an average of $59,000 so far this year. Each of the 4.5 million MPF account holders was $3,000 poorer this month alone. The plunge was blamed on COVID, higher interest rates, and the war in Ukraine. GUM found that the Greater China Equity Fund plunged the most, tumbling 37.5%. The equity fund lost 28.6%. The mixed asset fund was down 23.7%, while the fixed income fund, which invests in currencies and bonds, fell 6.1%. Greater China assets were under pressure due to COVID lockdowns on the mainland and the country's real estate crisis and Sino-US trade and political tensions. Poor stock market performances around the world led to the drop in the equity fund. GUM Executive Director Billy Wong advised people who will continue to contribute to the MPF over the next 5 years to retain the same asset portfolio, saying in the past, the period that return rates have dropped continuously was 2 years. He also suggested that members spread their investments and urged people who are retiring not to withdraw all their money immediately. They can retain some money in the fund and wait for a market rebound. In response, the Mandatory Provident Fund Schemes Authority said people should not be overly concerned about short-term market volatility. Maisie Mock, HKIBC.
Standard Chartered has reported a 40% surge in the third quarter pre-tax profit from a year ago. The $1.4 billion earned by the London-headquartered lender far exceeded market estimates. The bank, which generates most of its revenue in Asia, profited from higher interest rates. Its results were announced one day after rival HSBC announced a 42% drop in quarterly profit. Standard shares in Hong Kong rose 2.7%, while HSBC gained less than 1%. And now let's take a look at the markets. The Hang Seng Index closed up 152 points. Top 10 active stocks, Tencent up $5.20, Meituan up $6.20, Alibaba down $1.30. Tracker Fund up 15 cents, Wuxi Bio up $1.30, and BYD Company up $4.20. Forex trading against Hong Kong dollars, the euro is at 7.86, British pound at 9.08, and Australian dollar at 5.08. Moving on to the UK market, the London FTSE is currently down 34 points. On to the weather now. More fine and drying conditions in the coming days. Temperatures tomorrow will range between 22 and 27 degrees. Now let's take a look at the weather around the world. And that's our main news for Wednesday night. Join us for more news at 11. I'm Chloe Feng. Good night.